Around about 1960s, anybody around back then? There was a bit of a thing going on. I'm going to tell a bit of a story, but I'm using blue for the shares. Anybody ever heard of blue chip shares? Cool. And the red is going to be our houses, because you get the little red monopoly houses. That just seems to kind of work for me. So we had this thing going on. There was a bit of a war going on. And back then, we called the terrorists the VC, the Viet Cong in Vietnam. Okay, they were the terrorists, they were the bad guys who could hide around and jump out and scare you. And what was so bad about them, they were friends with the Chinese. And now everybody's friends with the Chinese. We don't care they're communists anymore. We just like buying cheap t-shirts. When the war was on, the share market wasn't doing a great deal. People were kind of panic stricken. People were investing in, where's our biggest security? Bricks and mortar. Okay, so the house prices were going up. If you've got your little clock, follow along on the back, because this gets really interesting. So the terrorists were blowing up things and killing people. House prices were going up. It was all good. The government said, hey, these houses that used to cost $10,000 now cost $20,000. House prices are getting unaffordable for the average person. We're going to put the interest rates up. They put the interest rates up to stop people from buying the houses. What happened then? Housing market levelled off a bit. Okay, sat pretty quiet. Around about the same time, we finally got to the end of the war, or maybe it never really ended, but we just pulled the troops back home. And people felt a lot better about things, started to invest into other areas because they realised the house prices weren't going up and the war's over. Maybe we could start investing in the stock market again. So the stock market went up. The stock market continued to go up, late 60s, early 70s, and I'm in your way so you can't see. Stock market went up, and then we had another terrorist thing happen. Anybody around in 1975? Conflict in the Middle East, Iran, Iraq, this kind of stuff. There was terrorists who were actually hijacking planes, taking hostages, airports 75, 77, this kind of stuff. We act like it's a new thing, like September 11 just hit us out of the blue, but it happened 25 years ago. But in 1975, there was a bit of a conflict in the Middle East, and the oil price went up. It affected us very badly in Australia because we've got a little population, big country, we have to truck things all over the place. It didn't matter whether it was timber, cheeseburgers, ice, whatever, the cost of everything went up because the oil price had gone up. So in 1975, businesses started to lose money because the oil price went up. Stock market started going down. Guess what happened to the property prices? 1976 to 1982, property market doubled. You guys see over there? Just paying attention? Guess what happened? Housing prices got unaffordable again. House price went from $20,000 up to about $45,000. They go, oh my God, what do? We'll jack up the interest rates. When the interest rates went up, people stopped buying the houses. Housing prices levelled off again. If you were there, you've doubled your cash, absolutely. But if you bought at that point, you might have had to wait 7 to 10 years for that cycle, because most of it happened in the last few years. So where are we up to? 76 to 82? 82, the housing market starts to level off, the interest rates get high. What happens? Where do we invest now when everything is pouring up here? In shares. So we started buying the shares. 83, they went up. 84, they went up. 1985, the stock market went up by 56% in 1 year. That was the year they bought out Wall Street, the movie. Greed is good. If you're not rich, you should be. Everybody started piling into the share market. 56% 1 year, the next year went up by another 45%. Where are we up to? What year is this? 87. 87. Anybody remember what happened in 1987? Somebody went, you know what? That's a ridiculous price for that share, because the earnings weren't that high. The shares that used to be returning you 8 and 9% of income, now you're returning you 3% because the price has tripled. So the stock market crashed. It didn't crash down all the way back to where it was, but it crashed down enough to get people panicked, and people started pulling out of the market. Where do I invest now when the stock market's just crashed? Property. So all the sheep run across to the property market. 1988 to 1992, property prices doubled in Australia in 4 years. Really nice if you were there. A bit sad if you've been buying back here and had to wait 10 years to double your money. And what happened in 1992? Who was around then? Anybody remember what the interest rates were? 1992, 17, 18%. Because the government didn't want us to buy any more houses. They whack up the interest rates. That's all they can do, is put up the interest rates and put down the interest rates. They can't come around and slap you every time you buy a house. They said the price is too expensive, so put a brake on it with really high interest rates, ridiculously high. What happened? 92, 93, people weren't buying houses anymore. They were too dear. Couldn't sell them. That sat flat till around about 1999. About 7 years there. At the time I was working in the bank, and when people came in to refinance, as the interest rates came down from 18% back down to a more reasonable 10%, we're using the same valuations. We didn't bother sending out the valuer to look at the property. So what was it worth 92 when you bought it? Yeah, it's still worth that 7 years later. Okay. 1999, I sent out an email to all my clients, said hock everything that you can. Buy a house. Don't care where, just buy a house. Make sure it's a good one, it's pretty, got good tenants. Buy houses, because this thing is going to double. Been 7 years since the previous peak, the interest rates were starting to come down, watching the clock. So 1999, I bought houses, a lot of my clients bought houses, and guess what happened 12 months later? They all rang me up and said, "You're a bloody idiot." I said, just hang in there, just hang in there. I don't know what's going to be the trigger event, but there's always a trigger event. Whether it's the assassination of somebody or new president, whatever it is, sooner or later, people are going to realise that the stock market was actually getting dangerously high. 2000 is when we had the dot-com boom, and people were paying $140, $150 for Yahoo and Google and these sort of shares that hadn't actually made a profit. Warren Buffett wasn't invested in the internet stocks. He pulled out because he knew it was getting too high, it was getting too ridiculous. And people were saying he was old-fashioned, he was crazy, and he's been doing it 50 years, he's finally lost his marbles. But then a little while later, we had September 11, 2001, bang, Twin Towers came down. Everyone around the world went, what the hell was that noise? Finally started to take a look at their situation, called their loved ones, sort out their finances, and realised that that was a ridiculous price for those shares. And they're going to make them cheaper again. Sell them off. From 2001 to 2006, property prices again doubled as people were running out of the share market and into the property market. So as you say, property price doubled in that 4 or 5 years. And now you might think, oh gee, I'm out of the market. But there are some people who are actually taking out loans 6 months ago saying, yeah, the house that I had has just doubled. I'm going to take a big loan out against that house and buy another house. Wait for it to double again. That's like saying if it's come up heads 6 times in a row, I'm going to bet heads again. It's crazy, absolutely crazy. So the property market will level off. In the Sunshine Coast, they've actually said it's going to drop by 30%. At the moment in Melbourne, there's guys who actually repossess your house because you haven't managed to make the last couple of payments. They're picking up 50 houses a week in Melbourne. In Sydney, it's only about 30 houses a week that are being foreclosed. But there's a lot of people who extended their debt far too far, thinking that the property price was always going to go up, and they bought 2 or 3 more properties. Absolutely. At the end of the day, the demand is going to drive it. But the investors are the guys who actually part with the $500,000 or the $600,000 for the house. They're going to be looking at before, with this renters actually returning me 3.5%, and I can get more money by sitting cash in the bank, or I can buy a few shares in the bank, and a lot of the shares at the moment in the big banks are paying 6.5% income with no tax on that. So if you're an investor who had $1 million in your pocket and you say, okay, this one's going to pay me 3.5, plus I pay tax on it. The bank's going to pay me 7 or 8, I pay a little bit of tax on it, but it's rock solid, it's secure, it's a term deposit. or the bank shares are going to pay me 6.5 with no tax, which one are you going to buy? And the smart money at the moment is going into those secure blue chip shares. It'll be a while, because the rent will pick up. While this property market sits flat for a couple of years, the rent will continue to rise until it reaches that crossover point where all of a sudden it's actually cheaper to buy than it is to rent. That'll happen again. The whole cycle will go around again. But for the moment, you may be able to buy a very cheap house in the next couple of years. There might be someone who overextended themselves. They might have paid $150,000 for it. When it got to $350,000, they took out a big loan to go and do something else and find that they can't actually cope anymore. That's quite common. It's happening. And at the end of the day, and you better write this one down too, it's all about the income. That is what drives these markets. Because when the property prices get too high, not only does the Reserve Bank put up the interest rates to make your expenses higher, but just by nature of the fact that it's doubled in value and your return has stayed fairly similar, only picked up by maybe 10%, your income is less. And that's when you start to see the smart people moving out of the property market. And we can have this argument all day. You know, I'll upset the real estate agents, particularly if they've only been in the industry for 5 years, because they haven't seen a cycle. They don't realise that 3/4 of the millionaires don't own their own home. And the ones who do own their own home only spend a little amount of money on it, have most of their money invested elsewhere. But every now and then, like in 5 years' time, I'll probably be sending out that email again saying, rush out, take out a big loan against your shares and buy property. And a few years after that, I'll be saying, take out a big loan against your property and buy shares. Because rather than just sitting exactly where you're good at, whichever one of these it happens to be, doubling your money every 7 to 10 years, why not double your money every 3 or 4 years?